Hi, today we're going to talk about an accounting firm, Arthur Anderson collapse, the full story, including the major fraud cases they were involved in. So there is a documentary, somebody presented it, so I'm going to explain it in my own words. So let's begin with the story. So this is a story that includes major fraud cases they were involved in. Arthur Anderson, this collapse story of Arthur Anderson. So, as we all know, there are huge corruptions and intentional mistakes in the accounting. So, let's talk about the story. So, there is a video presented by this gentleman. So, his name is Bill, and this video we are talking about Arthur Anderson. What we are going to do is to provide a brief coverage of the story of the firm from its founding in 1913 going through the main milestone in its life and the growth they had in the 60s and 70s and the beginning of the lawsuits and the trouble with fraud in 1980s and 90s, so leading to its collapse in 2002. Obviously, with the case with Enron and WorldCom, what happened, Frank? We took our shifting losses and put them into businesses that we actually own, and then the balance sheet is showed profit. But actually, there was that. What the hell? And basically, we will go through all that, and then this gentleman is going to provide you with the connection between the story with Arthur Andersen and what we are seeing today with the fraud cases. With things like luck and coffee out of China, Wirecard out of Germany, and connection between what happened with Arthur Anderson and what this gentleman is saying he sees is going to happen or might happen in the future with the big four accounting firms today. So, without further advertisements and stuff, let's jump into today's video. So, the story begins with the founding of firm in 1913 by Arthur Edward Anderson, and basically he was a very bright young man. He was a son of Norwegian immigrants in Chicago, Illinois, and basically he studied accounting and graduated with a degree in accounting and became a CPA, and not just that, but the youngest person to ever become a CPA in the great state of Illinois. And at that time, and basically he went to work for Price Waterhouse. And at that time, that was before PWC became PWC. It was only Price Waterhouse before the merger that happened later in the 1990s between Price Waterhouse and Lee Brandon. Lee Brandon Coopers to form PWC. So he worked for Price Waterhouse for a couple of years, and then he went to work for a manufacturing company. So this is a great a video that I'm sharing with you. There is an ad in the video, so I'll just skip it and we'll continue to with the story. So the reason I cannot play its voice is because of the copyrights infringement. So for a manufacturing company as a senior accountant, and then he decided to leave the company and form his own firm at the age of 28, which is incredible. He says that he could never have dreamt of forming an accounting firm at the age of 28, which allows that he's extremely smart and risk taker as well. So he started the firm at the time there was also the introduction of the federal income tax, and basically with the introduction of federal income tax in US, there was a lot of compliance work and filing work to be done. So that was a big opportunity. That he saw, so he started the firm with a partner at the time by the name of Dailani, and so it was Anderson and Deloney LLP. They operated this way for years, until his partner decided to leave him, and so he dropped the name Dailani and just became Anderson LLP, and then in 1930s, a big opportunity presented itself in the form of the American president at the time um, issuing orders to establish the Securities and Exchange Commission and the FDIC, basically indirect response to what was going on Wall Street. Basically, stockbrokers were running Wall Street as a huge casino with no much rules, no money rules around the trading of stocks. So, so he's saying that he wants us to go through there, and he wants you to ram Steve Madden stocks down your client's throats till they choke on it, and they buy 100,000 shares. That is what he wants you to do. This is what his gentleman was saying. So basically, that establishing of the Securities and Exchange Commission for the first time required for the first time requiring publicly traded companies to get an independent audit report from an independent accountant. And that was a huge opportunity here for Anderson LLP because basically now there is a huge market that opened up with all the companies being required to get an independent audit, and the firm continued to grow and operate until 1947, and that's when Arthur Anderson himself died, and basically the firm almost dissolved or went out of business because many of the partners wanted to dissolve the firm and uh, go their own way, but on one of the partners by the name of Leo Spacek basically got all the partners together in the room and convinced them to stay together and operate together under the umbrella of Anderson LLP, and basically he became the managing partner at Leo Spacek firm that continued to operate well into the 1960s and 70s. So up until 1960, the company was only providing two types of services, audit and tax services. But then in the 60s, with the introduction of computing and businesses beginning to use computers to make the business more efficient, that was a huge opportunity for Anderson LLP, and they got into consulting, and that propelled the growth of the firm to new heights. So we will continue the documentary from here. What happened after this? So the firm to the new heights, and basically then the company was operating under Anderson Worldwide, which is the parent, and then they were operating Anderson LLP, which is the audit and tax arm of the company. In this video, it is just we are just telling a bit history about Arthur Anderson, and we will move on in next few segments. What actually happened? Why the company collapsed? So the Anderson and Company, and that was the consulting business, and basically then so a huge growth in 1960 and 70s, but this huge growth that the company had seen didn't come without a price because basically um, uh, you had to ends to of the spectrum the consultants. From one end, and the auditors or the accountants on the other end, fighting for power over the destiny and the decision making of the company. And related to that, there was a huge focus on fees and making money. One of the rules they had at that time was that if you are an audit partner, and you bring in a new audit client, you had to change the client two times to audit fee and other consulting services. So basically, if the audit fee was 10,000, you had to charge them or create other consulting services with the same client for $20,000 so that you can meet your sales quota. So partners, and obviously, well, I mean the audit partners, and obviously that was a big problem because then there was a huge focus on on money, and less focus on integrity, watching for fraud and accounting malpractices. So that led and accounting malpractices. Let me tell you something. Though now this is Leo. Uh, it is a depiction of the Leo. So he's saying that accounting malpractice. He's talking about market malpractice, and He's saying that let me tell you something. There is no nobility in the poverty. I have been a rich man and I have been a poor man, and I choose rich every time. And so basically, the firm was growing, but at the expense, so growing its top line, but at that expense of the foundation of the business itself, as a company that should have integrity and should watch for things that we talked about. So basically, the growth was rapid in 60s and 70s, leading up to 80s, and so basically 1980s, the lawsuits began rolling in, and that was a direct result of the Arthur Anderson letting go of its focus on integrity and values and focusing more on power and money and just basically making more fees from clients. And so, some of the cases or the notable cases that we can mention in 1980s was DeLorean Motors Company, the lawsuit brought by the investors in DeLorean and the lawsuit brought by the investors of Drysdale Securities, and also American Savings Alone. And the one that is interesting here is DeLorean, because basically Arthur Anderson issued a clean orders report for the company, even though it had two things going on. Number one, the company was had a going concern problem. Basically, they were unable to meet the demand and the production that they were supposed to make the cars that they were producing. Number two, the CEO or the president of the company, John Dolarian, basically was uh, siphoning money or stealing money from the company by setting up vendors in Panama, and basically creating invoices and sending money to Panama, um, and that was for his own use. And the story is very intriguing with him later trying to save the company by trading cocaine and heroin, but basically the that could be a video for topic for another video, but basically that was the case with Dolarian. So we will finish it up here, and in the next segment we can talk more about such frauds. Thanks for watching.